if there's one bit of advice, it's take the emotion out of investing. If you have a long-term time horizon, stick to that time horizon. And if you read the New York Times on a Sunday and it said, go into the mountains with your guns and your cans of soup, that's not something to panic about. So it's one person's opinion. You want to make sure if you have a long-term view, you stick with that long-term view.
Greg Olsen is a partner with Lenox Advisers who's been fielding calls from investors as doubts mount about the economy's recovery, pummeling stock prices. The S&P 500, the index that mirrors many investors' mutual funds, is down 16% since April. And the outlook is murky as worries mount over Europe's debt crisis. And the job market in the U.S. is sluggish and the housing market is weak. What's the biggest mistake somebody can make right now?
They're selling at the wrong time. Taking your money out of the market when the market's doing well, not after it pulls back by 15%. And if you're pulling money out of the market now, only do that if you needed the money and it shouldn't have been in the market in the first place.
Where to put that money for your kids' college or retirement? Olsen now puts 50% of investments in stocks, 30% in bonds, and the rest in alternatives like precious metals that include gold.
Gold is a great inflation hedge, and you have to think that one of the only ways that the governments, not only ours but in Europe, are going to get out of the banking crisis is by printing money. And gold is the only currency that you can't print.
With so much uncertainty, Olsen does expect the market to move another 10 to 15%, but he doesn't know in which direction. He's just one financial advisor, but like most, the closer you are to your retirement age, the less risk you likely want to take with your money. Mary Snow, CNN, New York.